Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zach's Market Edge.
Welcome to Zach's Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm joined by Zach's very own Jeremy Mullen, who's the editor of Zach's Counterstrike. And we're going to talk about a topic that I feel isn't getting much play, even by the national media, or even much by Wall Street at all. And that is the agriculture industry and what is happening there, because some of it isn't very good, actually. Let me set the stage for our discussion first, and then Jeremy and I will, of course, give our winners and losers stock picks in this area, what you should be looking at, and how you can play agriculture right now, and hope for a comeback, because the last I recall, things were great in the agriculture area. In 2012, farmers' incomes were at the highest they'd been in 25 years. And as you can imagine, there's a lot of money flowing around. And I saw these big headlines that were like, I copied some of them down. There was one from MarketWatch that was said, yes, you can become a millionaire farmer. There was one from Bloomberg that said, Iowa farms minting millionaires as rich-poor gap widens. And then Time had a July 2011 story that said, want to make more than a banker, become a farmer. That's how good it was. And I remember they were buying Mercedes. All the agriculture stocks were soaring. Corn prices were at like new highs. It was good times. It was going to last forever. But here we are, 4 years later, Jeremy, and everything has gone the other way. And there's been layoffs. Some of the farmers, they're saying, could be in trouble, like with their bank loans again. I'm having like visions of Farm Aid from the 1980s. I don't know. You might be too young to remember Farm Aid, Jeremy. That's when they had like John Cougar Mellencamp, and it was in Indiana, and they raised all this money for the farmers who were in deep trouble back then. Hopefully, we won't get that extreme, but what's going on? I mean, fill us in.
Well, yeah, it looks like the corn and wheat agriculture bubble from 2010 to 2012 definitely popped, and now it's under severe stress. The U.S. Department of Agriculture expects farm income to fall for the third year in a row. Some of these farmers are actually giving up leases on their farmland because they can't afford to sell equipment they don't need.
Yeah.
44% of farmers called agriculture their primary occupation in the most recent census by the USDA. That means the other half is actually doing it part-time, or they have other part-time jobs. So now they're forced to borrow to pay essentials like seed and fertilizer, and farm debt is projected to pass $372 billion this year. And adjusting for inflation, that's the most farm debt since the late 70s.
Okay, I saw some interesting stats. They were saying that, just to put it in perspective, so the corn prices have come way down, and it now is costing the farmers, at least in like Iowa and Minnesota, that's where I was looking around for these stats, it's costing them $4 per bushel of corn to get it out, harvest, all of that stuff. But it's only selling for $3.
Right.
So this is the problem. And for 3 years, they've actually been operating at a loss in these states.
Right.
How long can you do that? Not forever.
Yeah, I mean, you have to keep on borrowing until it comes back, right? Luckily, interest rates are so low, so these debt-to-asset ratios against the value of the farm isn't as bad as it could be. Back in the 70s and 80s, we'd probably have a big problem. We would have to start another Farm Aid, right?
Yeah.
But yeah, you're right. Under $4, we are significantly under there. We hit a low of $3.22 not too long ago. Earlier in the year, when it looked like we were like a lot of farmers were getting late planting due to the weather, we spiked up to over $4.20. Now, there was a lot of oversupply in the USDA agricultural reports, and since then, corn has come down. We've had this droughty weather, but it's come with all this beautiful rain in between.
Yeah.
So the crop is really good. And if you drive in the country, corn's looking good.
It's tall.
Yeah.
This is what I've heard, that they're expecting a record crop of corn, 15.2 billion bushels in the U.S., and the soybean is also at record, little over 4 billion bushels. So too much supply, there's not going to be that much demand. But I always say, and they're saying this in the farm country, and this is what Shiraz and I said about the energy commodities, the best cure for low prices is low prices.
Yeah.
Because eventually there's so much supply sitting out there, they won't plant as much, and that supply will decline.
Or they'll switch crop. Like soybeans hasn't taken a hit like corn and wheat, so they might rotate their fields into the soybean or some other crop so they can actually make money. I wanted to go back to what you said. It's 175.1 bushels per acre on the last report. That's a new record high.
Wow.
And I saw the USDA chief economist now forecast the corn crop. He's lowering his forecast to 315 and suggests we might even see a two handle on that, which would be the lowest price since 2009.
Wow.
Yeah, before everything took off.
Right.
Yeah.
So that's not helpful. I also saw, I was thinking, can't they just export a lot of this somewhere else because other people need food? But with the strong U.S. dollar, that's not really helping them either. The Europeans are paying more.
Right.
Well, almost everyone is paying more if we try to export it, out of here, and they don't necessarily want to pay more for it either. So they're not really buying it either.
Right. And, if you look at some of these companies that we're going to be talking about, they cite China slowing demand is one of the reasons that they're struggling. And that's just, that slowing demand is part of this whole supply and demand equation that's forcing prices lower.
Okay, so what about those land prices, though? They're starting to come down slowly off of those all-time record highs we saw. I mean, that was what was minting millionaires. If you owned any farmland by like 2011, 2012, that's when you were buying the Mercedes and you were like, woohoo, I won the lottery and all that.
Right.
Starting to come down. But the banks and all of that, they're not going to necessarily go in there and foreclose on, late farmers and all that stuff, because that's the last thing they want to do, kind of like similar with the energy companies. They want to renegotiate or extend, loan demands and all of that, because it doesn't help anyone to have, foreclosures.
Yeah, the banks want things to turn around and they want that note to be paid, of course. So they're going to do everything they can to keep these farms going. I also wanted to point out, going back to corn and wheat prices, a way to enter the space is CORN and WEAT. Those are two ETFs to get involved.
WEAT, you said?
WEAT, right.
And that's actually playing the prices of corn and wheat.
Actual up and down prices of corn and wheat.
Okay,
correct. So you can also trade the futures, but not everybody trades actual futures. Okay. So like oil, you go in USO. This would be if you want to go into corn, you go to CORN or WEAT.
Okay, those are easy to remember. Yeah. Those are basically like a day trade. You're not buying them to hold on for months on end, are you?
Well, you could day trade. These things don't move a lot in a day, unless you were betting like on a USDA move. If you thought, the weather, the planting season was bad and you think corn prices are going to go up, you could do that. But if you were looking to get long or even short corn, that betting the prices are going to lower, this is a way to do it. No, unless you wanted to trade the futures.
Okay. Switching hands to a lot of the companies that are going to be impacted by this. Obviously, we need to talk about them, but let's start with the farm equipment. I mean, if your income is down or you're not making money for 3 years, you're definitely not out there buying your combine or your planters or any kind of equipment. I saw some stats that said farm equipment coming to auction, it has prices about 30 to 40% lower than in 2012, which was the boom years. They were rolling in the cash. They were buying tons of farm equipment. And, now it's going the opposite way. So what does that mean? Let's talk about some of the equipment makers, like Deere, for instance. That's the big one everybody always thinks about. Deere, they make all of this. It hasn't been good for them this year, even last year. But is this the worst we're going to see? What do you think about Deere?
Well, you made a good point. So if the secondary equipment is so cheap,
why
go out and buy a new huge tractor for hundreds of thousands of dollars from Deere? Right, when you can get it for a third of the price.
Right, this is hitting all of these guys.
So yeah, it's been hitting them. It probably will continue to hit them. Now, as far as going out and buying John Deere stock, you obviously have to look at the bigger picture. But yeah, I mean, it's a tough call here because it's a depressed sector. It's a depressed industry, and it's tough to go in and just kind of buy the lows of the whole ag space when you're looking at even possibly lower prices.
Right. Deere, with the ticker DE, they're expecting a 10% decline in sales worldwide this year. That's not that bad considering, because it's not necessarily awful worldwide, but it's pretty bad in the US, which is one of their bigger markets. And then they have been doing some layoffs. They've laid off about 2,000 people in the US so far because obviously they're slowing production at these major manufacturing facilities. And then they realize that it's not going to improve within 6 months. So they literally are just like laying off people permanently at some of these places.
Yeah, $25 billion market cap on this guy, 3% dividend. So, we talk about that earnings yield a lot. 3% dividend is attractive. I went back to their call and kind of looked at what they said on that. They cited China economic weakness, but they did say the value of ag production should stabilize. So they're looking forward to the second half, maybe to 2017, as possible stabilization in the space. They did talk about the Indian economy, a government that supports the ag sector, and they talked about EU modest growth. So, some negatives and some positives there. But looking at their estimates, they're trending lower and they have been since 2014. So it's difficult to just jump in here. They have earnings on Friday morning. I'm thinking, they probably miss. Maybe the revenues tick down, like you said, you said 10%?
Yeah.
And the stock gets sold, but then the big boys, the big smart money comes in and says, ooh, there's a 3.5% dividend now. Let's get long. So maybe as a trade, you look for something like that and you look for a bounce off of, some panic selling into the smart money buying.
Okay, but these kinds of trades that we're giving right here are really long-term positions.
Yeah,
for the most part.
Right. So this whole thing we're talking about is cyclical, right? So you're getting into depressed prices and you want to give yourself some time to for it to turn around. And it's nice with a deer, you get a 3% dividend, you get paid while you're waiting.
Okay. Their competitor, Agco, I looked these guys up. They're not cheap though. Even though we're in this, recession for the equipment makers, they are trading at 20 times. They're expected to see an earnings decline of 27% this year, as Deere, everybody is. Estimates are still being cut for 2017, although there should be some improvement on 2017. So it looks like 2016 is the bottom. They're also seeing some strong, or at least a little bit better in Europe, maybe. And then Brazil has shown some optimism. AGCO has big Brazilian business and sales are up down there. But they're saying the same things we were just talking about. New and used inventory is high in all the equipment. And so until that gets sold off, that's not going to help them. These guys are still, they're still profitable. They have pretty decent cash flow, but their dividend yield's only 1%. But at least you're getting something.
Yeah, lower dividend for sure. They beat by 13% and raised revenue guidance last quarter, which was, it was the first or second, I believe.
Yeah.
So it was just a couple weeks ago. The stock didn't really react very much. It's kind of in the same spot.
No, because they're already trading at 20 times.
Exactly. So while they have a good
cheap.
report, investors are probably confused. Some are like, hey, what's going on? Why isn't this going higher? Well, it's kind of priced in already.
Right.
And it's because they don't have the dividend support. Investors aren't willing to step in and carry it higher. On their outlook, they still said gross and operating margins are expected to be below 2015 levels due to that negative impact of lower sales. So, they still see trouble ahead. So it's tough to jump in this one too.
Yeah.
I mean, you really are picking the bottoms of the whole space.
Okay. I feel like these aren't real values here yet to get them really cheap. So sorry, all you value investors. And another one, Titan Machinery, not to be confused with Titan International. This is the ticker TITN, and they are basically a distributor of farm equipment. They're in the Midwest mainly. They're in 11 states, but they have overseas. They're in 4 countries too. So they own the retailers. So if you're a farmer and you want to go out there and buy a tractor, you might go to Deere or Agco and they're distributors, or you go here. It's kind of like an auto dealership, but for farm equipment and other construction equipment too, not just farming, but farm is big. And they sell the C&H brands, which is a European company. So they do Case Construction and the New Holland type of tractors and all that stuff. But I saw last year they closed a whole bunch of their stores because, this is not a new story about that things are declining. And then they laid off about 14% of their workforce, but it looks like they've kind of stabilized. What do you think about Titan here?
Yeah,
Same story.
Titan was one that I didn't really follow. It's 235 million market cap, so a cheaper
Small.
company, and they're small because, like you said, they've been kind of trimming
Yeah.
things down. Looking at the estimates, next quarter we see a little bit of an uptick, but it's a lot of that same thing down the road. Analysts really aren't looking what they're seeing. They missed EPS in May by 31%, but it didn't really do that much to the stock. They have earnings
Yeah.
next week again. The chart doesn't look bad. Bottomed in February, just under 8, ran up to 13. Now we're sitting kind of in the middle around 11.
Okay.
If earnings come out and it goes below 10, I would get out of the stock if you're in it. If it holds up, it might be a good buying opportunity to take out those early March highs there around 13. So
Okay.
just kind of keep an eye on this one. It is that smaller market cap, so it can move a lot faster than some of those big guys if there's a turnaround coming.
That's right. Now, what about the companies that are actually able to benefit from these lower corn and soybean prices and all of this? I know that there are some because we were we were talking about it, and let's give some hope to the investors
Sure.
out there about areas that are seeing pretty good results right now. And one of those would be ADM, which is the ticker, I believe, ADM.
Mhm.
Archer Daniels Midland supermarket to the world. I still remember that ad campaign. It's got to be like, other than Coke and some of the others, one of the best ever. But they're actually a little bit down on EPS this year, but a nice rebound next year. And these guys, make the food ingredients and all of that. So when corn prices go lower, this helps them, right?
Yeah, definitely. They actually, I pulled a CEO quote. The CEO Juan Luciano is his name.
Okay.
And they said results for corn include strong performance of sweeteners and starches offset by lower ethanol results. So in this case, they are seeing some strength due to the low corn prices. They get their margins are bigger, but since they are diversified, they are still affected by the lower prices in corn. And but the stock has actually looked pretty good. Um, the let's see, 2016 lows were 30, and we're trading at 43, which is the the 2014 high was 54. So we're not that far off of those 2014
Yeah.
highs.
People like these food companies.
Yeah, I mean, we have up
2016.
20% this year alone.
Yeah, they pay a dividend, 2.7%, so that's not bad.
Yeah.
I have the forward P a little bit over 18, so they're not cheap either. I
Right.
wouldn't consider that to be super expensive for what
Sure.
you're getting here. But that's one to keep in mind. And another one that's kind of in this food area is called Ingredion,
Right.
and their ticker is INGR. This one most people probably haven't heard of, but they also make, again, similar to ADM, food ingredients, including corn syrup, sweeteners, starches, same kind of stuff.
So what was highlighted in that ADM call, the sweeteners and starches,
Yeah.
that's where these guys are really winning. And if
Right.
you look at the chart for Ingredion, I mean, it looks beautiful.
Yeah, that's a crazy chart.
Right. So, I mean, the stock just looks fantastic. It looks strong. A $10 billion market cap, that 1.3% dividend. They had a 3.5% beat in raise in late July, and the estimates are all looking higher. So this
Yeah.
thing looks strong. Now, up here, you're chasing a little bit. So if you do see a pullback, maybe it's time to get in there. But if you flip this chart upside down and put it on a top of a corn chart, I think you'll see a correlation there.
Okay. That makes sense, though.
Yeah.
Earnings supposed to grow 16% this year, and they're looking pretty good into 2017. The analysts are pretty bullish
Yeah.
there. And they actually lock in their margins like late December or right around the beginning of the year. So that's how they kind of, keep everything under control, because they're hedging those corn prices. So if corn prices stay low again heading into the end of this year, they're going to lock in those low prices again.
Yeah, like the USDA chief economist said, I mean, if they get into the two handle, these guys are going to be set for a full year.
Yeah. So that's also something to watch with them. Okay, let's recap some of these just so everybody knows. And I still believe even for any of these, they're really much more of a long-term play, especially the ones that are on the depressed side of the equation. The Deere, ticker DE, AGCO, which is AGCO, Titan Machinery, TITN. You need to be a longer-term investor, I think, to get into any of these.
Yeah, I think of those three, this Friday obviously is important for Deere.
Yeah, we'll get earnings.
How it reacts to earnings is how I would decide whether or not I want to be long that stock.
Okay.
If I do see that smash down after earnings just on the headline number and then a rally to, let's say, go positive, I would take that as a very good sign that the smart money is getting in there and buying it. I mean, maybe just based on that dividend and a second half or 2017 turnaround.
Okay. That's good to know. And then the other two more positive plays are the food ingredients companies, ADM, which is ticker ADM, and Ingredion, which is ticker INGR. Do you have a favorite amongst these two?
I really love that ingredient chart.
Okay.
I don't like to chase things. It's almost at 52-week highs. But if I get a pullback and, the story hasn't changed, I'd be looking to enter that stock. ADM
Okay.
is it's come pretty far. And while the chart looks okay, just if you look at 2016, looking back, it's come pretty far. So I would want to give it a rest here. I probably wouldn't enter here.
Okay. We'll revisit this story, in a couple months or so and
Yeah.
kind of check in and see what's happening. Hopefully there's no Farm Aid. I don't want another one of
No.
those. Anyone who remembers those can agree with me. And, a lot of the economies I feel in the farming states are a lot more diverse. They did what the oil industry did in the 1980s, which also had its problems at around the same time, where they diversified. And so they have a lot bigger job base. I looked around just a little bit to see, those deer cuts. Some of those were in Moline, Illinois. Some were in Iowa. And the area around where those cuts are happening, it doesn't help that there's, caterpillars in that area as well, also cutting jobs. But the overall unemployment rate in that area is around 5%, which is pretty good considering. So hopefully, we'll be able to transition people into other areas and until this cycle is done. And then, of course, they'll be hiring again and they'll be like, where is everybody? So we'll be checking in on the agriculture story again soon. And we didn't cover the fertilizers, but we're going to cover those in another podcast. So if you're a fertilizer fan, you're probably like, where are the fertilizers, Tracy? I want to know about my fertilizers. We're going to cover that. But you can also check out any of our other podcasts. We've done a couple on other commodity areas. Jeremy and I did one on gold. We also did one on gold stocks. And Shiraz and I have covered the oil story for at least almost a year now. So be sure to check out our other podcasts on the commodities because this area is constantly changing and has been a big story in 2016. And you can also check out our articles all on the same topics on Zacks.com. So the podcasts are on Zacks.com, SoundCloud, and iTunes. And of course, YouTube. You can check us out there too. We're basically everywhere. So until next time, I'll see you then.